Okay, sorry. We're going to open the governance committee meetings.
Who's on first?
Right. So I will note that Jesse Olzak, representing the Director of the Division of Budget, is participating in the Media Vita video conference from the New York State Division of Budget conference room at the Capitol Building, room 131 in Albany. I'll ask for motions seconds to call to order the April 11, 2019 Governance Committee meetings of the State of New York Housing Agency, the State of New York Affordable Housing Corporation, the State of New York Mortgage Agency, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporations. May I please have motions for HFA and AHC?
So moved.
Second.
Thank you. A motion, please, for Sunny May.
So
So
moved.
moved. Second.
Thank you. A motion for MBBA and TSFC.
So moved.
Jesse, would you please second that?
Second.
Thank you.
Cool.
I'll note that Ken Adams is the Governance Committee Chair for HFA, AHC, MBBA, and TSFC, and that the Commissioner is Chairperson for Sunny May, and will chair the committee meeting for Sunny May. As items are presented to each committee throughout today's meetings, these motions and seconds, as you know, will be used unless specific items call for a different vote or unless any committee member wishes to record his or her vote differently. For purposes of convenience and to make sure that the meetings for the respective agencies go smoothly, items shared by one or more of our agencies will be presented by Chairman Adams.
So these items are shared items. Item 1, the following minutes of the various committee meetings held on January 24th, 2019 shall be deemed approved, absent corrections from members and directors. Members and directors of the Governance Committee, any concerns, questions about the minutes? Second is a resolution recommending the approval of the Governance Committee's self-evaluations. Alex is going to talk about this. Thank you, Alex. Good morning.
Good morning. I'll take the middle. So every year under the Public Authorities Law, the Governance Committee and the Audit Committee have to evaluate how they're doing. We started doing this in '05, and we've been doing it every year. Questionnaire is sent to the committee members, and we get the responses, we tabulate the scores. We usually keep them confidential, but this time I screwed up, and you know exactly what everybody said.
That's transparency, Alex.
Transparency.
We like progress.
But nobody said anything really bad. So as you can see by the comments, there was unanimity that everything is going well, very well. There was only one question that got the max score is 5 combined, and it got like a 4.14 because we got a 2 from Nestor. And the question is the one that has drawn a similar type of weakened responses in the past. The committee directors have the option to influence the meeting agenda in order to address emerging issues. And the thing about it is that the Governance Committee, really since Bill Morrow became chair, has become sort of the place where we do a lot of the contracting matters. And we've been doing less governance stuff than we have in the past. So I think the agenda, when you see the agenda, you see just a series of contracts, and every once in a while we have a session on the Public Authorities Law or on governance issues. So I see that, and the way that I've tried to approach it is every year I tell the committee if there's anything, just like, for example, Gary's doing the Audit Committee presentation today as a result of comments from Mr. and others about a particular topic they wanted to cover. So if there's a particular topic that the committee wants us to cover on the governance side, be happy to do it. We did one last year, I think, on the statutes, and so I'd be happy. There's no need for it to be done formally. Anytime anybody wants something, thinks of something, just feel free to call Linda or I, and we'll be able to structure. We meet 4 times a year, and we'll be flexible. So that's pretty much it, and we'll be back at it again next year.
All right, good. Anybody have questions or comments for Alex? Thank you, Alex, for that.
Okay.
Okay, then
Linda,
now
back to you.
before all 5 committees is the resolution of the Governance Committees of the State of New York Mortgage Agency, the State of New York Housing Finance Agency, the New York State Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation concerning self-evaluations. Assuming the first and second previously entered for all 5 boards, all in favor, please signify by saying aye.
Aye.
The motions are carried and the resolution is adopted.
The next three items on the agenda are consent items. There'll be no discussion on the following items unless board members or directors so desire. Item 3 is the annual review and approval of facility-related purchase orders and contracts, including review of agency insurance policies. Linda, that's you.
All right. If there are no questions, and now before the HFA, AHC, and Sunny May committees is a resolution of the governance committees of the State of New York Mortgage Agency, the Affordable Housing Corporation, and the New York State Housing Finance Agency authorizing contractual agreements for facilities, telecommunications, and administrative services. Assuming the first and second previously entered for HFA, AHC, and the Sunny May committees, all in favor, please signify by saying aye.
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 The motions are carried and the resolution adopted.
Item 4 is a resolution approving and reviewing information technology or IT services contractual agreements. Linda?
There are no questions. Now before the HFA and Sunny May committees is the resolution of the governance committees of the State of New York Mortgage Agency and the New York State Housing Finance Agency reviewing and approving continued retention of information technology contract with TierPoint New York LLC and approving expenditures under purchase order contracts with EMC Corporation. Assuming the first and second previously entered for HFA Sunny and the Sunny May committees, all in favor, please signify by saying aye.
Aye.
The motions are carried and the resolution adopted.
Thank you, everyone. Item 5 is approval of purchase order contracts with the New York Times, an annual review of contracts with the New York State Legislative Bill Drafting Commission, or the LRS system, Reed Elsevier, Inc. for LexisNexis, West Publishing DBA, the West Group, for the West Group, and CQ Roll, Inc., otherwise known as CQ.
Now, before the HFA committee is a resolution of the Governance Committee of the State of New York Housing Finance Agency approving purchase order contracts with the New York Times, with the New York Times, as well as the annual contracts with the State Legislative Drafting Commission, Reed Elsevier, the West Group, and CQ. Assuming the first and second previously entered for the HFA committees, all in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted.
The next two items on the agenda are information items. There'll be no discussion on these items unless committee members or directors so desire. Item 6 is an annual review of agency lease with ISACO Development for the office in, where is Andy sitting right there? For the office in Buffalo that Andy Sanfilippo is sitting in right now. So that's important. And item 7 is an annual review of the MOA, or the Memorandum of Agreement, with the Natural Heritage Trust. Any questions about either one of those items? Good. Well, then there's no unfinished business. So, do we have a motion or seconds to adjourn each of the 5 agency members and directors committee meetings? Please.
Second.
Thank you.
Then assuming the first and second previously entered for all 5 committees, all in favor, please signify by saying aye.
Aye.
The motions are carried. The resolution adopted. The meetings are adjourned. The next meeting of the Governance Committee is scheduled for Thursday, June 13th, 2019.
2 months hence. All right. A welcome to everybody. As some of you might not have seen the television, but Andy Sanfilippo is there in our Buffalo office, so welcome. Thanks for joining us today. Andy, Jonathan Ballin is here to my left. Nestor Davidson snuck in. Good to see you guys. And I think at this point, actually, we still hope that Director
Yeah, I
Joyce
can't
Miller
see the
may-
whole table.
Well, we look really good over here on the left.
I
All
bet
right,
you
pivot
do,
the camera to
Jonathan.
Director Ballin, please.
No,
All right,
no.
Joyce. Okay, and Joyce isn't able to join us. All right. Anyway, we're going to get into the, I guess, the next, the Audit Committee meeting, and then we'll proceed with the rest of our business. So this is actually the work of Audit Committee Chairman Nestor Davidson.
And I'm going to turn things over to Linda Manley, who will take the record of the formally open our meeting.
I'll note that Jesse Olzak, representing the Director of the Division of Budget, is participating in the meeting via video conference from the New York State Division of Budget Conference Center at Capitol Building 131 in Albany, and that Andrew Sanfilippo from the agency is participating from the agency's Buffalo Regional Office at Electric Tower, 535 Washington Street, Suite 105. I'll ask for motions and seconds to call to order the April 11, 2019 Audit Committee meetings for the New York State Housing Finance Agency, the New York State Affordable Housing Corporation, the State of New York Mortgage Agency, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation. May I please have motions for HFA and AHC?
So moved.
Second.
Thank you. A motion, please, for Sunny May,
So moved.
And a second?
Second.
Motion, please, for MBBA and TSFC.
So moved.
Thank you. And a
Second.
Second.
As items are presented to each committee throughout today's meetings, these motions and seconds will be used unless specific items call for a different vote or unless any committee member wishes to record his or her vote differently. I'll note that Chairman Adams is the agency's chairman and chair of the audit committees for MBBA and TSFC. Ms. Miller is the audit committee chair for SONYMA, and Mr. Davidson is the audit committee chair for HFA and AHC, and will chair the meetings for HFA and AHC. For purposes of convenience and to make sure the meetings of the agencies go smoothly, items shared by one or more of the agencies will be presented by Mr. Davidson.
We'll begin with item 1. The following minutes shall be deemed approved absent corrections and directions. The minutes of the New York State Housing Finance Agency, New York State Housing Corporation, State of New York Mortgage Agency, State of New York Municipal Bond Bank Agency, Tobacco Settlement Financing Corporation. Comments, questions? We will now move on to the action item. Item 2, approval of internal audits work plan for fiscal year 2020.
Morning.
Morning, Steve.
I tab 2, we're going to ask you to approve our work plan for fiscal year 2020. Here I've used the same format as I have in the past. You have 4 schedules, a calendar of events, budgeted hours, our objectives, and a summary sheet which tells you the hours we're going to spend for testing, analytical review of internal controls and administration. But before I go into this year's plan, just want to briefly go over last year's plan. Last year's plan was approved by the committee on April 12th of 2018. We completed the plan as intended. However, we did reschedule some audits based on management's request. Completed 12 internal audits, and we also assisted the New York State Financial Services in May. We are going to carry over a limited number of hours for the debt finance audit, but that was anticipated in the 2019 plan. So I'd like to thank the staff for their effort and for their cooperation in completing the plan. This year's plan is as aggressive as last year's. It's developed for a staff of 4 and myself. We're going to do 11 audits, 5 integrated audits, 4 servicer audits, and 2 SONYMA audits. And of course, we'll assist the finance department again in their audit of SONYMA. The plan was developed after a review of internal controls, a risk and vulnerability assessment, and discussions with management. So we're going to ask you to approve the audit plan for fiscal year 2020.
Questions? I have one small question just on the information technology audit. To what extent does that reflect where we are on BAM, and is that even part of that particular audit, or is it separate?
We had not included because it was still in the production stage, and at that point, development stage, it hadn't gone to a production stage, so once it's in a production stage, we'll look at it. We've been involved from a minor.
So would you then modify the plan once we're locked in on a timetable and presumably finishing out the timetable?
Right, we would include it as part of the IT audit. It's not in the objectives right now because we don't have the firm date.
The only thing I'll say on that is the IT audit, if I'm reading this correctly, is I guess June and July?
That's when it's scheduled. We can revise that as we have with other ones.
So
But we're supposed to do it on an annual basis based upon the risk assessment, which is a high rate, and that's why we have to schedule in that time period to be compliant.
I might encourage you to think about maybe bifurcating and doing your normal annual audit then, and then perhaps some component or a follow-up at the right time. I don't know when that would be, but once the system is up and running, I think it's important to get that into your process.
Sure.
Thank you.
Let's do one quick question. Steve, and I apologize if you've probably answered this question of mine before. And by the way, just let's note, I want to note, Nestor, like the work that you and only, is it 3 other people or 4 other people? So a team of 4 and yourself doing, one at the rate of 1 a month, basically, right? 11 to 12 audits a year. But could you just talk a little bit, remind us about the risk assessment and how that determines the frequency of the audits? So I imagine there's some that you do every year, and some every 2 years, and some based on risk, lower risk, every 3 or 4 years.
That's correct.
But just could you give us a little refresher on that?
Sure. The risk assessment is evaluating departmental companies, how they affect the overall operations and financial statement. and we go through the components and we evaluate what the risks are, how we can possibly lower that or mitigate that risk based upon the internal controls that are in place and the functions that are performed. And based upon that, we will overall come down, for instance, on the IT department as an example, because that's a high risk. You have the different components that make up, that they perform. And as we're evaluating it at this level, because we're rating it not only on the financial, the operations, but the legal repercussions if there are problems, and the operations as well. So the overall scores of each individual category is total, and we come up with a rating for either high, moderate, or low risk.
Right.
And the low risk is every 3 years.
Okay.
The high risk is every 9 months to a year, and the moderate risk is in the 2 years.
Right. Thank you. Thanks.
Any other questions, comments? All right, Linda?
Now before all 5 committees is a resolution of the Audit Committee of the State of New York Mortgage Agency, the New York State Housing Finance Agency, the New York State Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation reviewing and approving internal audit plans for the fiscal year 2020. Assuming the first and second previously entered for all 5 committees, all in favor, please signify by saying aye.
Aye. Aye.
The motions are carried and the resolution adopted.
Item 3, approval of internal audits, follow-up audit of 2017 audit report.
This is a different type of audit than we normally perform. Here we go back to the audit reports that were issued in 2017 to see if management had implemented the recommendations or corrected the exceptions as agreed upon. We did 10 internal audits in 2017. What I've done is listed the titles in the report for your convenience. The result was that we found out that 14 of the 16 recommendations and exceptions have been corrected. That's 88%. There were 2 items that remain outstanding, and we've listed them in the report, as well as current comments from management. And we're going to ask you to approve the report and management's response.
Questions, comments?
They're now before all 5 boards is a resolution of the Audit Committee of the State of New York Mortgage Agency, the State of New York Housing Finance Agency, the State of New York Affordable Housing Corporation, and the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation reviewing and approving internal audits, follow-up audit of 2017 audit reports, assuming the first and second previously entered for all 5 committees. All in favor, please signify by saying aye.
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 The motions are carried and the resolution adopted.
Item 4, approval of internal audits, MBBA audit.
Here we looked at the accounting records and systems of internal control for MBBA. I'll make it brief. There were no bonds issued or bonds refinanced, no new legislation or policy changes. As of our audit, there was about $362 million in bonds outstanding. Our audit included a review of the debt service, regulatory compliance, and the accounting records. The result was that there were no exceptions, so we just issued the report. We have no response.
Questions, comments?
The now before the MBBA Audit Committee is a resolution of the Audit Committee of the State of New York Municipal Bond Bank Agency reviewing and approving internal audit of the MBBA program, assuming the first and second previously entered for the committee. All in favor, please signify by saying aye.
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 The motion is carried and the resolution adopted.
Item 5, approval of internal audit, servicer audit of TIAA Bank, N.A.
Here we looked at the mortgage records and the systems of internal control mortgages that are serviced by TIAA as of 2018. As of the audit, they were servicing about $62 million in loans. TIAA Bank is a subsidiary of TIAA FSA, which had about $295 billion in assets on 12/31/17. They are a third-party servicer for the Bank of New York Mellon. TIAA is a full-service mortgage group. They deal with acquisitions, originations, impaired loans, servicing of residential and financial corporate properties. Bank of Mellon is participating in all the program's bond indentures. Payments can be made at any locations or lockbox operation. That's short. The results of our audit was we were able to satisfactorily achieve our objectives. There was one item in the report. Management responded, and we're going to ask you to accept the report of management's response.
Questions, comments? Thank you.
And now before the Sunny May Committee is a resolution of the Audit Committee of the State of New York Mortgage Agency reviewing and approving internal audit service or audit of the TIAA Bank. First and second previously entered for the committee. All in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted.
Item 6, resolution recommending approval of the annual evaluation by the Audit Committee. Gary?
Morning.
Morning.
As Alex discussed with the governance committee evaluation, the same process is followed with the audit committee evaluation. We'll receive evaluations, and the results were good. As I mentioned in the memo, we got, what was it, like 4.5 or something out of 5? 4.66 out of 5. The only item that was mentioned was a session on critical accounting issues, which Nestor brought up, and I'll be going right into that. I'll try to do the professor thing, like see if I could do okay with that, Nestor. And another one on the mailing timings of certain things was pointing out that items weren't received timely,
I think that was more, I don't think that was audit committee.
but it was mentioned in one of the evaluations.
Yeah.
So I have to point that out. Besides that, I think it was pretty good. Any other comments on that?
Questions, comments? So I have one question, not about the report, but about the fact that this may be your last meeting with us.
You heard.
There's a rumor.
Now it's true.
So thank you for all the incredible work you've done, and I'm sure there'll be some more, hopefully there'll be some more formal recognition.
Thank you, Nestor. I appreciate it very much.
It's been great to work with you.
Yeah, it's been really an honor to speak before the board for, gosh, I think I've been doing this for over 10 years, that I've been the one coming up all the time. It's been an honor.
Really appreciate it.
Gary.
Good luck, Gary.
Thank you.
Good luck, Gary.
Thanks, Andy.
All right, then now before all 5 committees is a resolution approving the annual audit evaluation, a resolution of the audit committees of the State of New York Mortgage Agency, the New York State Housing Finance Agency, the New York State Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation concerning self-evaluations. Assuming the first and second previously entered for all 5 committees, all in favor, please signify by saying aye.
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 The motions are carried and the resolution adopted.
The next item is on the agenda is an information item. There will be no discussion on this item unless committee members or directors so desire. Item 7, financial statement update for the first quarter of fiscal 2019, third quarter of fiscal 2018 for AHC. Comments, questions? Our last item is a presentation by Gary as part of the audit committee's ongoing educational and training function. And thank you for pulling this together.
Everybody should have gotten a copy of the HFA financial statements and an outline of my presentation. I'll be referring mostly to the financial statements and that this references as it comes along. So I was thinking about what is a critical accounting issue that we face. So the first thing that I thought was important is, you know, everybody's familiar with, I think, with general financial statements, and what is the difference between the general financial statements and government accounting statements? Added to that, how does a public authority, like the agencies, fit in with a government accounting standard? Because we're quasi-public. We're not really government in a way, but not private either. So it's kind of a hybrid that you would find, but mostly following GASB standards, which I'll get into in a second. So basically, the most authoritative statement for all of accounting in the United States is GAAP, which you may have heard of, Generally Accepted Accounting Principles. There's a common set of accepted accounting principles and standards that govern all financials throughout the United States. There was some talk about international accounting standards. It was a big deal a few years ago. Some of that has actually sort of bled into GAAP without the United States formally adopting GAAP. Government international standards, but it has affected the way some things have been approved over time. But the government accounting is not really affected by international accounting standards, except as major things have changed over time. So another thing that you always hear about is generally accepted auditing standards. When the auditors come in and they do the audit, Ernst & Young, they're following the generally accepted auditing standards in the United States, which they reference in their audit opinion. This is to make sure that they comply with certain standards when they're doing their audit. And then comes the Financial Accounting Standards. The Financial Accounting Standards Board is sort of like additional standards towards GAAP that private industry mostly follows. And for a time, there wasn't really a separate government accounting standards, although there was, of course, a big difference between government accounting and general accounting right away. Primarily, when we speak about things like appropriations, which the agency, as I said, quasi-private organization doesn't really book the same way. So when it was found that FASBs weren't always addressing all the government issues, along came the Government Accounting Standards Board. Now, the Government Accounting Standards Board came about like in the late 80s, and they're already up to like 90 standards at this point, which we've all...
Sorry. Andy, do you think you could perhaps mute on your end? We're getting a little background noise.
From me?
Yeah. Sorry.
He's a loud reader.
Thank you.
Thank you.
Must be said hi.
Okay, so the Government Accounting Standards Board is an independent organization that governments follow in developing certain standards that are followed that are particular to government. A lot of this was just taking in a lot of the FASB standards because, of course, money's money, financial statements, so much of that was still adopted. Now, one of the core principles of GAAP and of everything else is the recognition of income in the period earned and expense in the income in the period earned and expense in the period that it benefits, like why you made the expense. We just call it the matching principle. So what happens is, like, you get income in, but it's not necessarily for the current period. It may affect many periods. Expenses, same thing. So I'll be turning back to that on a lot of the more recent government accounting standards, which were put into effect to pretty much show what effect current expenses that you incurred have, that you might not have spent the money on yet, and income that you may have received but have not quite earned yet. So that's an important standard of any accounting, and I'm going to address 3 standards later on that really get to the heart of this. At this point, I don't know if you have the HFA financials. I don't know how much you really need them, but that's pretty much where I'm going to be referring from my outline too. The beginning of the HFA financial statements, going all the way up to the responsibility page, which is on page 11, are certain reports that we've always put in just because we have to meet this disclosure based on the governing law of the agents of HFA. I'm using HFA as an example because it's my last board meeting. I'll tell you, that's the one I know the best. I relied on Henry a lot, who retired last September. We've got a good team. Daryl's you'll be able to hear from him about it. I know it, but I always say that I know, like, the veneer. HFA I know a lot better. So I'm focusing on HFA. So the first part, although a lot of the GASB standards refer to both, absolutely. They do. So the first part, the statistics, is we're required to list all the projects that have mortgages. So we list that. Then the next thing that you have over there is you can have a summary of financing and repayment. And there's another one that just is a way we came up with a schedule to meet with a certain requirement in the law. But then comes the responsibility of financial reporting. And this is signed by Ruth Ann and Sheila, showing that the agency is accepting responsibility for its financial statements at the highest level. You hear from internal control, there's tone at the top, and that's what this statement gets to the bottom line of. And the next thing that you have in the report is the report of the internal auditors. Now, for the past, we've gotten clean audits, no exceptions, with the audit that's done by Ernst & Young. And if you look at this report, which when I started, it was like a couple of paragraphs on one page that you used to pretty much have to memorize in school. But now it goes on and on and on, as everything else. And it's a 3-page thing, but you will notice that they do reference the generally accepted auditing standards that I mentioned. And in here, they talk about a new government accounting standard. There was an adoption of GASB 75. I'll be getting more into that later on during the prior period. And then we get into the management discussion and analysis, the MD&A. Now, there was a GASB issued in the late 90s, which was GASB 34. Now, you might not even know about GASB 34, but us who work on the accounting think it's a big deal. GASB 34 is the one that promulgated much of the reporting that is required to be done by government agencies. That's where we got the MD&A from, the management discussion and analysis. It is required in GASB 34. I have a big book that shows, examples and adaptations from GASB 34. That was where things really changed. A couple of small things that changed with GASB 34 was what we call the statements, which I'll get to again in a second. Everything is in GASB 34. So we're starting with the management discussion analysis. Now, there's a way of giving changes from year to year by emphasizing the most important activities that have gone on in the agencies, and showing what the changes were. And the thought is that by showing a change from year to year, if something has a big change, or if it has a big balance, you're going to be talking about it. You're going to be talking about bonds. How many bonds do we issue? What percentage did it go up or down? Why? Mortgages. These agencies, the HFA and SONYMA have been growing. Like every year we'll say, bonds went up due to strong, increased lending activity. Mortgages gone up. Fees have gone up too, pretty much because of a lot of closings that we do in HFA. So we'll pretty much be saying, why? Why did this happen? So that's what's important about the management discussion analysis. It also and it gives highlights of the year too. In SONYMA, the highlights that Sherry writes go through the whole year. Here we list a lot of the bond issuance throughout the year and things like that. So if you look at the management discussion analysis, you'll see.
Can I interrupt for 1 second?
Sure.
So I think that section is, what's important to me about that section is the impact of the board. Prior to Judd Levy becoming the chair in 2008, that section covered everything that Gary's talking about in the accounting context, but didn't really give a full flavor of what the agency had done that year because it's not required under the accounting principles. Judd felt we gotta say something, and so that got expanded to the current version, which now has all these highlights. And as a result of that, because it's approved at the January board meeting, we developed that presentation before the audit committee where everybody does the PowerPoint and tells you everything the agency did. That never happened before. And that was all the result of a chair looking at the financials and seeing it as something that just addressed accounting issues. And he wanted a document that could go out that told everyone, this is what SONYMA did, this is what HFA did. Not required, right? And
Well, a lot that he put in is not required, and sometimes the auditors will be like, we don't really have to put that in, but he insisted, and now
we had to fight with them at the beginning to make sure. They were like, why are you putting all this story here? We don't need this. And it was because he wanted to use the financials for a broader purpose rather than that. So
right.
They should continue, I think, beyond Gary and me and others.
Right. I mean, if you look through it, you'll see changes in, from year to year activity, percentage changes and things like that, background, and important issues that have gone up in the year. I'm going to go, unless you have a specific question on the management discussion analysis to keep moving, I'll just move through the rest of the statements, but I'll take questions, of course, at any time. The next statement that you would see is a statement of net position. Now, what's a statement of net position? It's really a balance sheet. They call it a statement of net position because there was a term, for a number of reasons, there is this concept of deferred inflow and outflow of resources within government accounting. So on certain GASB requirements, which I'll get into in a little later, like swaps, pension, and now OPEB, which is benefits received by employees post-retirement, other than pension. That's why it's OPEB. That's OP is other than pension. those have deferred inflows and outflows of resources. So basically what's happening is you're deferring the revenue recognition of receipt or deferring the expenditure later on to show when it is actually going to be incurred. Now, they had to find a place to put that on the financial statements, so they put it on the balance sheet. If you looked at the balance sheet, you'd see deferred inflows and outflows. But now, guess what? Balance sheet doesn't balance anymore because you have these lines called deferred inflows and outflows, which are not liabilities or assets. All right, so just change the name. Call it statement in that position instead of calling it a balance sheet. And they call an income statement a statement of revenues, expenses, and changes in that position, just like it is an income statement. We split it up into operating revenues and non-operating revenues. An example of a non-operating revenue is federal grant money coming in, reserve funds that we receive from mortgagors that we take into income, and actually transfers from New York State, which we've been getting a lot of recently, I guess, because of the housing plan. So actually last year you would see like over $200 million in 2018 coming in for a variety of reasons that come in, transfers from New York State. So now I'll go on to the notes of the financial statements. Now, as much as the MD&A gives a nice summary of everything, the heart of the financial statements is the notes. This is where disclosure occurs. This is where everything that you need to know about the agency must be disclosed, is in the notes. So the first critical accounting issue that I'm going to point out is our recording of subsidy loans. Now, the agency has been advancing more and more subsidy loan funds. Now, most of these become subordinate debt to debt that the agency has first liens on. Most of these do not require current payments. If they do, a recent change requires hard payments of interest at a low interest rate, which is first being put into effect now. Those payments are interest. Principal, from what I've seen, there might be a couple that I'm not pointing out, there's a pretty much a balloon payment of principal required at the end of the loan. So what we decided to do a while ago, when this first started, is we would immediately take an expense for the amount that we are lending out. Why? Because you might not get that principal balance back for 30 years. So we'd be inflating our balance sheet by having a really big loan receivable and our fund balance. Instead, what we do is we take an allowance against it. By no means does that affect what we consider to be the collectability. And then when the money comes in, we record it as income. We call that recovery income. So we might have, so we'll just lower the allowance on the loan and the loan itself to reflect the principal payment that comes in, which occasionally does come in, interest payment that comes in. We defer the revenue recognition of that interest until it's either due or collectible. On a lot of the old loans, the ones before this new change, you might not be collecting interest until the deferred developer's fee is received or until up to 15 years have passed. At that time, you're only taking the revenue in to the extent that a cash flow test is done by the project. And they'll send back their financial statements, and I know they're reviewed in the asset management, portfolio management. Dan Murphy's group reviews them to make sure that they're making the payments they're supposed to be made. And if an interest payment interest is always accruing, but the amount of cash that they pay is based on the amount of their excess income calculation, which is a long sheet that they go through. So we don't get that many payments coming in, so we defer the revenue until the time that that is received, always tracking what's been accrued each year. On the new ones, they'll be paying on a more current basis at the lower interest rate, even though some of the interest is still deferred. Okay, any questions? We also get money from the housing plan I mentioned for subsidy loans. Those we recognize, depending on the source of the subsidy, as a liability when it comes in from the state, because we know that the agency will only be using it to make these subsidy loans, and then when the money comes back in, it's recycled generally. I mean, you're not going to have it for anything else but making another subsidy loan, so then it goes right back into the liability. So those are not really income or expense most of the time, but that depends on the source of the subsidy. Sometimes that is going to be revenue and then expense. Did you have a question?
Just quickly, so in our operating revenues, we list interest on mortgage loans. That's, I think,
Sure.
the largest. And then we have a separate line for recoveries. So recoveries are not interest?
The recoveries could be interest or principal, but it's the ones that we had previously taken allowances against.
I see. So it's just deferred.
It's deferred.
I see. Okay.
Let's say that it's a project had a mortgage loan from 12 years ago. And for some reason, there's a prepayment, and the agency says, okay, you're going to make a prepayment, you're going to have to pay back your subsidy loan too. We have an allowance against the subsidy, so that becomes a recovery.
Okay.
After the interest too. The interest we also take in as income as it comes in. We've been calling it recovery. It's interest also. It's not that much of an item. But I actually also left out the Mitchell-Lama loans. We acquired Mitchell-Lama loans from UDC some years ago, which have no related debt to them. So those actually, which have no related debt bonds related to them. So when we get, the loans are already subordinated, but the terms of them change at the time of the refinancing of the first mortgage by HFA. So at that time, we record those loans as subordinate debt too, but no cash is really moving because it's moved from its original incarnation with the UDC loan into an HFA debt, which usually takes all those debts and puts them together.
Thank you.
Any questions on subsidy loans? Okay, so now I mentioned GASB 34 already, which is a requirement. But now what I'm going to do is get into a couple of the GASBs. Now I'm going back to what I was saying about the recognition of revenue in the period earned and the recognition of expense in the periods expended. I'm going to be talking a little bit about the swaps that are entered into by HFA and SONYMA, which are derivative instruments. At the time of 2008, when the markets crashed and things were going on, and even a little before then, GASB was concerned that governments had these swaps on, or derivative instruments, but ours are swaps, on their, entered into contracts, but not on their books. Because what they're doing is they're giving you a guarantee of what the interest you're going to be paying is, but they're, with a floor and a ceiling of the way they work, but yet there's nothing on your books for it except maybe an expense of keeping it. So they said you could be exposed. So what they did was they came up with a method where you had to test the effectiveness of the swaps on a year-to-year basis and see what they're really worth on a year-to-year basis. So it's putting it on the books, but this is where it really goes with deferred inflows and outflows, because what's happening is you put something on your books, like in HFA, the only swaps are state-related debt. They relate to the old score bonds, the old state bonds, or the PIT, or the score.
PIT scores.
Yeah. Well, we have a swap, but the state takes care of that swap because the state's responsible for the funds. So an actuary actually comes in, well, not an actuary, a swap provider or an expert on swaps comes in and values it and says, where do you stand now? So now you're going to be recording like at the value where you stand. As long as the swap is effective, it does not flow through income and expense. So in the end, though, if you went year after year after year and the swap made its payment every year, there would never be an effect on income or expense in the long run. It's just holding them on there, showing your position at the end of the year. So for HFA, if you look at we have a liability for swaps of 10.5 million, deferred inflows coming in, and all of this just kind of passes through the financials because all the swaps have always been effective. And for SONYMA, we actually have resulted in a savings of $8.3 million in the first quarter because of the swaps we've entered into. Cumulative, because of what we've entered into, these swap agreements. This one, if you look, it's in the financial statements. There is a note that that discusses the swaps, and it's a real big one. It has like a lot of numbers on it, showing the dates, the maturity dates, the the fair value. A lot of information. So now, one of the next GASB statements that I'll be discussing is the accounting statements for pensions. Now, until just a couple of years ago, the agency and all government entities, we recorded our pension expense as the amount we paid. Now, it's the state pension program. The state makes a payment, the agency makes a payment towards that every year. So we'd say, well, we'll just record our amount that we paid, and that's what our expense is. But then this new GASB made the state come up with a whole complex, they had to hire an actuary to review what the pension expenses have been to date and what the exposure is of the state. And within that report, they give the agency a little piece. And that little piece is the amounts that go to the different to HFA or SONYMA. And that's all reported from the state. We're pretty much just taking the state's report and putting it into the financials. And it creates like a gigantic footnote. It's like unbelievable. If you look at this thing, if you read this footnote, which is note 13 on pension plans, you'd think that that was the most important thing in the whole agency. But it shows our liability is actually pretty low compared to what you might think it is. And it's pretty close to what we paid every year. And they have the deferred inflows and outflows. We get all this from the state. They even put down over there like what the state's invested in for the pension plan and our proportionate share. It is a long note. And like I said, if you looked at this note on its own, you would think this was the most important note in the financial statements. Of course, it's important, but it's not that different than what we used to do just recording the expense here. For the state, I'm sure it's a very big deal. And then another one, the newest GASB standard was GASB 75. We just implemented that last year. And that's a change in the way that we record OPEB, the other than pension employee benefits, which the biggest one for the agencies is the payment towards the health care that provide to retirees after retirement. So I'm kind of affecting me now. So the change, what we do, in this case, we have more control. The agency hires an actuary. And every second year, they have to come in and look at all of the components of what this liability would mean. Now, remember before when I was saying about expenses recognized in the period, relating to the period. Now, an employee comes to work every day, and they're earning towards this benefit when they retire. So you can't just say that the amount that you pay out when they're a retiree is the only expense that you have. You're expensing it every year. And then they say, well, what's your exposure? How much does the agency owe for people who worked already and people who are currently being paid, as opposed to saying, because it's like a contract, basically, of how much you're going to be paying them over the long term. And right now, the HFA liability is $40 million, and SONYMA is $43.7 million on this for people who have worked their careers, and this being affected, recognized over their career. As I never really worked that closely with actuaries before I did this before, and I got on the phone. The Ernst & Young actuary talks to our actuary to see if Ernst & Young will buy into their report. And I had these guys get into an argument about mortality tables that I couldn't believe. And I was like, and I hear them talking, I'm like, the stuff that they're talking about, but I basically know that the new change, which actually lowered our liability, HFAs used to be 50, now it's 40. There are more requirements about exactly how to do it. I know one thing is that discount rate is more that they use when they do the calculation of, the whole life of this thing. You don't have as much flexibility as we used to. That was one change. But pretty much it's the same thing. It's just doing it a different way. Because there is a concern, obviously, of people want to know what governments are on the hook for pension and other benefits to be paid to retirees. They've been earned over people's careers and paid out when they retire. So, to summarize, the GASB statements that I've been focusing on have been the ones that affect numbers of years going out. I mean, when you mention like interest income on mortgages, money that you receive on mortgages, that's pretty basic, although it's really important, and that's where the business line is, This stuff is not as main as that is, but the accounting policy is for a first mortgage, as you lend the money out, you have a mortgage loan receivable. Whether it's a single-family loan or a multifamily loan, you get money in, you're getting principal, you're getting interest, we get fees, and that's pretty much it. It's this other kind of stuff where you get to the more complex area where the guidance has to be specifically followed. Any other questions?
But just to recap, guys, super helpful, and thanks for spending extra time on the pension and the OPEB issues. It sounds like the guidance and your work there is very much directed by the state, like as an agency, right? Like when you talk about the discount rate, and when you talk about...
No, with the pension and the OPEB. With the swap, HFA is directed by the state, but what I didn't get into is SONYMA swaps are directed by SONYMA. That's not the state.
Okay.
And what I mentioned also was the OPEB and the pension. Like I said, if you looked in here, it would look like the most important thing.
Right.
I didn't go into because you
But
said...
it is important.
Yeah, of course.
You're about to retire. You want this to work.
Absolutely. But you would think it's what we're
Right,
working on.
right, because the note, no, I did see how long the note is.
Yeah.
Yeah. But again, in that regard, we are a subset of the state and of the comptroller's office, right?
With the pension.
Yeah, that's what I'm saying.
Yeah.
Yeah, absolutely.
That's really, you're picking that up and putting that into our, right.
And that's why the liability is actually pretty small. We don't have a big liability. That liability you have with the pension actually is state's liability because the state's pension fund is very well funded. So this is the amount of the risk that's not funded, which I think New York is one of the lowest that would have a liability.
It's not,
Some states-
thankfully, Illinois or New Jersey.
I was going to say, we
Yeah,
can
liability
I mean,
would be much higher.
This is huge in Chicago. Like, it's a huge, it's devastating to them.
single most
Yeah,
important issue.
right, it's like, exactly.
And their liability would be bigger.
Oh, and it's totally unfunded, right? Or the percent of it is unfunded. It's a real. So anyway, it is very helpful. Thank you.
Okay.
This was great and exactly what we needed. Let me ask a sort of basic question that's going to get me fired as chair of the
Impossible.
committee.
Wow.
So every year I read these, and I'm always impressed when I get to the bottom line, and our statement of net position seems to get bigger and bigger and bigger every year. So my naive question is, what does that actually mean in the real world if we end up with what in the private sector would be a surplus or a sort of net positive balance? When you, I mean, you know,
Or a positive fund
revenue
balance.
on one side,
A
and
positive,
expenses on the other.
a positive fund balance.
Exactly. So what happens to that?
Holiday party.
I assume not, but you know, maybe I didn't get invited.
So what you're asking is what happens to the profitability of the agency.
Yeah.
Right.
I know some of it in the affordable program ends up staying in the program, and that could be used for other loans. But
By and large, it goes into a reserve.
Reserves, right?
Okay.
Yeah.
And is that accounted for here? I mean, is there a line that says here's the size of our reserves, or?
I don't know that it's reflected in here. From an accounting perspective, I'm not sure it's required to be.
Okay.
there's a GASB statement that talks about reserves and how you would have to show them. So if, it has to be a level of approval, which I don't think this agency would do. You would have to literally formally set up a reserve for it to be that specific reserve that would appear on the statement. But the reserves that we have within aren't the same.
You won't get fired. Ask the question again. So where's the money go?
Yeah. So that's, I don't know that I have the answer to that question, but.
I
Right.
think that's more for Sheila.
Some of them are in the bond resolution, as Desmond was pointing out, so they're restricted by the bonds. And then some of the reserves we've set aside for rainy days in case we do not have years where the revenues are as great
Right,
as
right.
they have been in the past.
Right.
So we have to account for that because there's no predictability in how the revenue will flow every year.
Sure. No, that makes sense. But where is it recorded, I guess?
Yeah. Or do we have any transparency on that as a board?
Maybe we can. Why don't we, when we do the year-end financials, we can follow up with that and sort of go through it in
I'd just be
detail,
curious.
since you don't have it sort of in this document right here.
Not specifically called
Called
out.
the reserve.
Yeah.
Okay. Might be helpful.
Mm-hmm.
I don't know if there are reasons not to, and if there are, I'm fine with that, but.
Okay. Yeah, I think we can go through that when we do
There
the
is
year-end.
a GASB standard that speaks to that and what it would take for that.
Okay. Great. Again, thank
Okay.
you. This was really helpful.
Okay. Well, like I said, it's been an honor to appear before the board all these years, and I'm glad I was able to do something helpful at the end.
It's your swan song,
You know,
Gary.
Gary has been great for years on our bond code.
Thank you, Gary.
Okay, I guess it's back to me. There is apparently no unfinished business, so we'll ask for motions and seconds to adjourn each of the 5 agencies' members and directors' committee meetings.
Assuming the first and second previously entered for all 5 committees, all in favor, please signify by saying aye.
Aye.
The motions are carried. The meetings are adjourned. Our next audit committee meeting is scheduled for Thursday, June 13th, 2019.